And the recording is better as well. Welcome, everyone, to the Market Watch Group Weekly Market Prep. How can so many people be missing Sunday? Maybe they're just late. Sunday is the best day of all days. This is the day when we really have an ability to understand things from a more logical, rational, professor-type perspective. The chimp is asleep in the cage. We can take our step back, look at things, understand it. Weekly market prep. Let's do it. Let's get into it. Okay, disclaimers as always. Not advisors, not brokers, no recommendations, no guidance. Be careful out there. That's the gist of it. Today's agenda, we'll go through our market posture. The expectation was actually that it might rebound a little bit. That was my thought. However, what I pointed to was the fact that in September, it also rebounded a little bit. And right? So it's kind of, this is where it's tough, because remember that the market postures, it is what it is and it's not what it isn't. And you're like, what the hell are you talking about, Scott? It's not a crystal ball. We don't purport it as such. It's not a crystal ball, right? It's a structure that allows us to organize on a weekly basis our analysis of 6 distinct components of the market that give us a broad understanding of characteristics and or strength and weakness. That's what it is. What it does and can do is it can help us to see shifts in momentum early. It can help us to discern whether shifts in momentum are just pullbacks. No, it's just a pullback. We're fine here. Don't worry, but we're not worried about this. Versus when we say, "Oh, wait, now this is something else," and that's what we've hit. We've hit that point. So once I've hit, now this is something else, then the next time it's like, oh, look, it's getting positive again. It's like, yes, it will get positive again because it's built to assess conditions like price action. And if price goes up, it's going to, okay, let's give it a quarter of a point. We, as traders, have to, and that's part of what we're doing this week in our trading plan, we have to assess implications. What does that mean in my trading? What am I going to do? So what I'm saying is, despite the fact that I'm seeing it get a little more positive, and I am willing to put bullish trades on. I love financials right now. So is there a chance I'll put a financial trade on this week? Yes, 100%. Am I looking to get a lot of trades on? No. 1 or 2. Wherever I might still see some strength and I'm like, wow, that looks good still. A lot of things are not like that. A lot of tech, a lot of industrials, a lot of consumer, a lot of communication services, right? That's why our sector rotation scores down to a 0. So you can see where we are. We're following the money. Now what? Now I'm saying, yes, I would still be willing to put on a bullish trade where I see strength. One of my trading rules that I've been reminding people, I don't buy weakness and I don't sell strength. Simple rule. I don't buy weakness and I don't sell strength. And you can use that on either end of a trade, theoretically. Whether you're entering a trade or exiting a trade. Works both ways as you think about it. So in this market, what we've said is there's enough momentum. Our market posture score is still positive, but it has declined 4 straight weeks and at a level enough that we say now this is something that's a little different. When we see this, we tend to see a second dip. Not always. This isn't a crystal ball. It's not always. But now I'm saying let's go find the market that correlates the most to what we're seeing. And that takes us back to August, September, October. That market ended up in a 10%. 10%. That's a correction. right? 10% is correction. 20% is a bear market. I don't think we're heading to a bear market at all. I do think this feels like and seems like we're heading, especially knowing what the cyclical tends to be in May and June, in the summer months. You've heard the summer doldrums. You've heard the saying, sell in May and go away. They say these things because the market really tends to lurch sideways. We didn't even get our last little pop that we tend to get in April this year. We have a Fed who has really shown reluctance and an unwillingness to cut rates early. And that's not a negative. I'm just saying the Fed is not going to be like, hey, the market would really like this. They're like, look, if PCE, CPI, PPI, if these numbers do not drop down, they're not going to cut the rates. They basically said we're not going to raise them either. So the market's like, okay, we can just kind of like, are we going to just wait for a little while? Well, in that waiting period, what is the market going to do? It's probably going to just kind of roll around sideways, right? What kind of trades? What are the last 2 trades I put out on the alerts? Calendar spread. Why? Because they're sideways trades. The first one worked out beautifully. Shut it down for nearly 60% on Friday. The next one's ready to go. And those are trades I can just like put another one on. Then I roll it out the next week. The whole time this thing's just going sideways and people are pulling their hair out trying to trade it directionally. I'll trade it sideways. I'll also try to trade directionally. We still have strength. There's still strength in areas and there's weakness in areas. So there'll be some things that go sideways. Some things will go up still. Some things will go down still. Okay. I'm going to try to find the things going up. I'm going to try to find the things going down. I'm going to try to trade the middle. And am I going to do it with a bunch of risk? Nope. It's going to be, an easy, like, is this an ideal level of risk? No. Or an ideal market? No. Therefore, I will not have my risk anywhere near what I would consider ideal max risk conditions. That's what I mean when I say implications. Look how much I'm now I can start to pick out the strategies where I say, okay, when I'm doing my sideways, I have calendar spreads and butterflies. Perfect. When I'm doing bullish, if the vol's low, I might buy calls, but it seems like it's holding on to the vol. So I'm thinking bullish spreads. Bearish, same kind of a thing. Where am I catching it in its volatility situation? But we'll go through. We'll look at the posture. We're going to be open. That's the main thing. If it gets a marginal move up, I'll be like, that doesn't mean much to me. I think that's still in the correct market correction narrative. I mean, if it ever gave like a 2-point jump, we'd have to be like, whoa, wait a second. A V bottom, a V reversal pattern of price might change the story for us. So we're open to it. Be water, my friends. After posture, we'll look at the economic calendar. What do we have this week? The answer is not much. We need to do some sector searching. I believe we said we want to go through financials and industrials. Does that sound right? Watch list maintenance. That's what we talked about, is maybe adding a few that we can give us some additional strong for things that are bullish. Is there any trades developing? I believe that the answer is yes, that there's a shopping list developing in financials for sure. Possibly industrials. Trading plan section of the week. We're on to section 3 already. You should have another pass. And if you came on Thursday, I hope I've given renewed energy. And if you missed it, you got to watch the video. Go to your emails or go to the YouTube channel. It's the first Trading Foundations working session. All of May, maybe even all of June. We'll play it by ear. We're going to do these working sessions, this practical application of just like really fleshing out, what does it look like, a trading plan? And Steven, not sure where Steven is. He'll listen to the recording later. Posted his this morning. Take a look. That's what we're looking for to get that. He says, look, I'm going to steal from you, Scott. I'm like, great. We're all working together. Okay, let's get into it. Yeah, I hope a few of you turn the corner with your trading plans where you're like, I'm not trying to like write this dissertation. Just a few things about what I'm doing here is all I need. Okay, let's get to the posture. And let's insert the copied cells and change the date. 5-5. Okay, here we go. Long-term trend. My expectation is that it's not going to change because I've been saying that for a while. Let's just go take a look at it though. And you can see that not only, I mean, it actually looks like it's trying to bounce, right? Like if this is all I showed you, let's pretend you don't know the time frame. You're like, what time frame is it? And I'm like, it doesn't matter. Just what do you see on the chart based on what you see on the chart? I see an uptrend. I mean, it's hard not to say that, right? I see an uptrend. I see an uptrend that accelerated most recently in its bullish cycle. And you'll notice as it's pulled back, it's bouncing right off the top of that old black trend line. I like to leave those there. Those to me act like other people use Fibonacci's. So when I see it hit this, I'm not like, oh, it's a magic line. I just like, look, I've got 4 different lines on there. There's a good chance it's going to find one of them, right? So that's how Fibonacci's tend to work. I'm just saying that's my opinion on the matter. If you're ever like, Scott never uses Fibonacci's. Yeah, I don't. But I like to have my old long-term trend lines that kind of show like, hey, where are the areas this thing might revert back to? So to me, it looks like this thing could be bouncing here. Now, here's the problem with that. When was the last time? Oh, I need my drawing tools. I don't have drawing tools anymore from there it is. Zoom. So let me use this instead. Okay. The last time we had this pullback and it looks like, hey, this might be a bounce, was the exact period I'm talking about, which was back here. It looked great from the long term, right? It pulled back and it turned up and it looked like it was about to get going again. So, and you'll notice that this move that we have here, this 3-week move, was even bigger than this. They were both 3 weeks. But the one we're in now was even more of a retracement on the first dip. So, yeah, my thought process is concern all throughout that right there, right? Anything that is below this prior low, if it just stalls out and rolls over, then yeah, that's what we're thinking happens here, is that we're in store for some kind of a more pronounced, and you can see, look at the time frame for this, about 2 months, May and June. It's not a surprising time for this to happen. So yeah, I'm very, very different now, right? Our tone, our conversation, the context we're setting is so different now than it was back in this area here, right? Just very different now. Everything we're doing is different. The way we're looking at things, what we're willing to trade, how long they're going to trade. That's what we mean when we say your implications. What are the implications when you're done forecasting the market? Okay. I don't mind these new drawing tools. They work out okay. So my long term is not going to change at all. I'm not going to raise the score, right? I'm not going to raise the score because I don't know anything yet. It just kind of looks like it might be. We don't know yet, is what I'm saying. So that stays the same for me. Okay, let's go to old resistance becomes new support. It does. You're right, and it could be. That could be. We need more information still. If it does, we'll score it. We'll score it. I believe that black line was a 1.5 is what we had determined here. One of them was 1.5, one of them was 1.25, and that's about where we are anyway. So, short-term trend. Okay, this one should be interesting. So in the short-term trend, theoretically, last week, 2 things happened. So this is the end of the prior week here. That's what we have. Last time, let me get this a little closer. Put it right there. Whoops. Last time, I think we left it alone. Yeah, so we left this alone. I'm kind of thinking I'm going to leave it alone again. And here's what I'm thinking is that it did a lower high. Why is that so choppy? Go back. Did a lower high here. And then it did a high. Jeez, this is so choppy. It's like, I like this Epic Pen, and now I'm like, I hate it. I got to go a little slower. There we go. Right there. And so ultimately, kind of just sideways, I guess. I'm going to leave it at a 1. Anybody else? Good morning, press. Good to see you. Yeah, I'm going to leave it as a 1. I don't think there was enough that's happened from this point to this point. Yeah, I'm going to go 1. I'm convinced. That's a 1. Let's go here and I see how that works. Okay. Okay, so unchanged on the first 2. Volume, I think, is going to still look a little bit ugly. Okay, so let's find our volume days. I'm going to make this pink. So we have a volume day here. That's a negative. That's a negative. That's a negative. That's a negative. I mean, this was just like an overwhelming round of like 4-0 for the sellers. And then in its recovery, nothing. Nothing from the buyers. Then, these aren't huge, but I would actually say both of these. So that puts us at 6, 2, we got 1. 6 to 1 for the sellers. Unchanged for me. If we had 2 or 3 days, or if this was only 4 or 5 to 1, maybe I'd take it to a half, a minus 0.5. But for me, I would say the volume is right now in the short term the worst looking part. The VIX is the best looking part, which is interesting because that's representative of institutional mindset. And the volume, which is conviction, is the worst part. Now, a quick test. So I'm a minus 0.75. A quick check. This is our starting point. This is our ending point. Okay, so it is down. So negative makes sense, right? Either one of 2 things is going to happen after this next week. Either the buyers are going to come in and our score is going to start to change, or sellers are going to give us this next leg. I'm not a doom and gloom kind of guy, but I'm definitely ready for something like this. I am definitely ready for something like that to potentially show up. Okay, let's go. We're moving at a pretty good clip today because I wanted some searching time. That all stays the same to me. Last week did nothing to shift any of that. Let's go to major market. Major market. Major market. Nope. I want you here. And let's start from the beginning. Supposed to get snow here tonight in Utah. It's May. I don't think Utah knows it's May. Snow. What's going on? Okay. So look at our 200 days. Where does it put us? I like to sometimes just take a step back and look. And it's interesting because it puts us right at the start of the previous one of these that we thought about. Right? This is the tail end. Late July, we were still bullish. Everything's pretty good, but our posture started to diminish just like it did recently. And then things started to turn over. And this says from the previous peak through the retracement to where we are now. Okay. NASDAQ on top. S&P slightly behind. Dow in third. Russell last. Okay. That's in line with what we've been seeing for quite a while. We go to 133. Well, now this is only from the bottom. Interestingly, right? So now we've said, all right, let's jump forward to the bottom of the retracement. Let's just make that our starting point, or at least very close to it. How have we done since then? Ooh, it's a lot more. It's a lot closer here. Let me just make sure everything is tight. It is. Okay. So we've got the NASDAQ at top, the Russell second. So both of them are kind of in the same place. That's very bullish. We're like, yeah, that's bullish. That's part of what led us to be bullish, was having both of those in place. The Russell behind, the S&P behind, but not by much. The lagging index here was the Dow. The Dow is never as strong. It's kind of sideways. Okay. So this sets a bullish context, but we score more of a shorter term, right? We go to the 66 and we say, well, what's going on now? What's going on right now? Right now, NASDAQ has shot back to a leading position. The S&P just behind. The Russell just behind. Those are our three leading, and the Dow is behind. This actually still holds bullish water, in my opinion. It's not super strong, right? We're not like, wow, look at this. What were we? I feel like I should be at least a 0.5 with what I see here. Okay, 0.5. I don't think it's stronger than that. Thoughts? Do you agree? Do you disagree? I mean, the Dow's down below. There's not a big surge of defensiveness of money flowing into the Dow defensively. The NASDAQ with Apple's latest things. I mean, with all we're looking at is just how the sectors are moving relative to each other, we would look at this and say, yeah, this looks more bullish than not. Does it look outrageously bullish? Nah, it doesn't. But it doesn't look defensive at all. Let's go to the 22. Here's the 22. We've got the NASDAQ inched back up top. The Dow is there as well. So this is just kind of, yeah, a lot of parity, a lot of sideways. If you notice, we went up. Everybody dipped. We came back. Russell not as far behind as I would have expected, having traded it on 6. I like your observation. I agree, actually, Press. I was a little surprised, too. Like, wow, okay. This is holding up. For now. I mean, here we are. It's sideways. So, yes, this aspect. So what does that mean to us? To me, this is what points to the fact that I think, yes, we could have more decline ahead of us, but no, I don't think it would be more than 10%. I think if anything here, we may have another dip, because when we get 10%, it tends to be at least a double, maybe a triple. Right? We've already had one. So 2, maybe 3 more downside momentum windows that put us somewhere around maybe 10 to 12% down. And then we look for a recovery because our market posture is still going to probably be north of 0. Last time we literally dipped to like minus 0.25 for 1 week. And we're saying, look, we're still neutral. We're not bearish. But we're certainly more inclined towards, downside things much prior to that. Okay. Let's do the same thing for sectors. And let's start at the beginning. Let's reload this thing. We're coming into this neutral. I mean, this is where the sectors have really crapped out, right? We've seen a lot of, we were a 1 back when, well, I guess it's been a while now. No, let's see. 1, March 10th. And it just started to decline. We dropped, and then we dropped, and then we dropped. An analyst I follow believes we're setting up for a summer rally. He thinks that it's rallying because rate hikes are off the table. I mean, yeah, look, I don't see anything that supports it as of now. Certainly, it's possible. And like I said, I'm going to put some bullishness on probably financials, possibly something in tech and industrials. So I'll have a little piece on, but nah, I'm not feeling bullishness right now. And the posture's mostly why. Let's go to the sectors and see what's cracking there. It's interesting that now look at communication services at the top. And that's interesting because there's a big divergence between the two pillars of that sector. Google showing a lot of strength after earnings. Meta much more questionable after earnings. Then we move lower to energy. Okay, now that's a good sign for us right there. If you looked into a more granular level of the inflation as it's stalled out, there are 2 areas that are mostly contributing to it. That is rent. There ain't nothing you can do about that. Nobody can control that. Obviously, the real estate market and the higher interest rate, that's a little bit of a cyclical problem because the higher interest rates are what's keeping homes more expensive, and more expensive homes is what's keeping rent more expensive. Landlords have to, right? So that's not going anywhere. What was the other contributor? Energy, gas. And we talked about it as back in February and March, we talked about this surge that we saw from oil. And we said, the longer it goes, the higher it goes, the more stress that's going to put on the market, which is exactly what happened. But that stress has eased. You can see if I can catch it. There you go. It's eased up. It's still near the top, but we've given back quite a bit. So that's nice. Not a lot leading, you can see. What do we still have? Still have financials near it, technology, and industrials. Those are the ones near the top. Materials have dropped off as well. And there's a little bit of a surge in utilities that we think looks a little defensive. So that'll be interesting as we get lower down here as well. Here's the 133. Who's at the top? Financials. Who's second? Industrials. As of right now, where are the 2 sectors that I'm most inclined to put a bullish trade on? Financials and industrials. maybe technology, and all of a sudden you can say, "Oh, look, yeah, Scott, there's a little bit of a jump there." Okay. Energy coming back down. We like that. Let's go to 66 days. Do you feel comfortable right now? Do you feel like you have a good sense of where the money flow is? Let me know. This is the good news. Energy is still at the top, but it is significantly dropped. Right? In fact, when we go to the 22, it may be the worst. It may have had the worst drop in the 22-day time frame. But who else is there? So we have utilities easing, which gives us a little bit of a respite from inflation and hope that numbers will drop back down. But we also have utilities, which says, ooh, whatever's happened has lasted long enough that there seems to be some defensive posturing. That's what that shows me there. Materials has come down. Industrials is still hanging on. And then you get down here and it's like, hey, everything else is sort of living down in this area. Is it a negative? Yeah, I kind of feel like I might knock this negative. Has anyone gone negative on this? Let's go 22 days. So here you go. When you look at the 22 days, what do you have? All defensive. Utilities at the top. Only 2 sectors are positive over the last 22 days. Utilities, staples. Everything else is down here. So if we were on the fence to say, you know what? We were thinking we might hit this to a negative. And then we go to the 22 day and what do we see? All negative. Now, what am I going to put this as then? I'm going to put this as a minus 0.25. I need a keyboard battery. This thing is dying on me. Just type it, please. There we go. Okay. Nope. I want that to be a minus. Okay. Agree? Disagree? Any thoughts? So now all of a sudden we have 2 in the negative. I think I thought this was going to go back up, but Greg's in agreement. Okay, love it. Yeah, all right, let's get to the VIX. What would make it a minus 0.5? Just as it gets more pronounced. So let's go back to it. Because if you go, remember that this is not our scoring. This is our tiebreaker. Here we only have 1. Utilities is up, but we don't have staples. Staples is somewhere else. Industrials is still close. So you only have 1 defensive here. And this is coming down. So, yeah, it's like the first signs of it. So I take it to a minus 0.25. If this has another week up and then all of a sudden Staples joins it, then it becomes a minus 0.5, right? And then, from there, depending on what we see, might make it more defensive still. So, all right. Good question. Boom, boom. Down to the VIX. Let's get here. Let's get to the VIX. Okay. Now the VIX. The VIX actually was an interesting one. Like I said, this was the most bullish. So 5 day. 1, 2, 3, 4, 5. So from here to here. What happened? And remember, we said 2 things. Number 1, cut this off and ignore everything above that pink line. That didn't happen. It's only in that range. It was never above 20. So it never escalated that high. That makes it artificially look like it was worse than it was. So reset that in your mind. Number 2, we said it had a hard road, and it took it, right? We said there's a good chance this thing could make a higher low, and it looked like it was going to in here, and then it just swallowed it. And not only did we get here, we actually got lower. So we came all the way down, and we got down here, made a lower high, and then we made a lower low. Now, I actually characterized this because this was the same as a same low. Someone could theoretically say it's a lower low, but because we had that little bit of shadow that was already down in that same area, for me, it was the same. And then when we came up, that is definitely a lower high. So for me, that's plus 0.25. And then what? Well, this is definitely lower than this. That's a lower low. So that is plus 0.25. I don't know. It's very interesting that the VIX got back down to 13.5. I don't know why. Doesn't matter. But to me, that is the strongest part of the market. So I'm actually taking that back to a 1. We're at a 13.5. We had a lower high and a lower low. Score what you see. What do you see? Okay, now what does that put me at? I went from a 2.75 to a 3. That actually feels right when I look at what last week did, in my opinion. That looks right. That feels right. We're based on how this thing looked last time it fell. I'm like, okay, what could happen from here? If we get a V bottom, this thing would kick back into gear, and we would if it V's and rallies, we would have a small piece on the first leg, and then we would be able to catch up very quickly. Be water, my friend, right? Adapt or die. So we would, when I look at this score and I think, what could happen from here? Well, the market could surge bullishly out of nowhere. Okay. I said I'm looking to have a couple of bullish things on, so those bullish things would do okay. My neutral trades would need to be adjusted, but I have the ability to adjust them after a leg up, and they should be okay. If I had anything bearish, I would close it down quite quickly. Okay. If it stays the way it is, what would I do? If it gets worse, That's what we're thinking about here. That's what we mean when we say, let's take our market posture, because I feel like our read on the market has been spot on. Spot on. We see it. I keep asking the question, has anything surprised you? We talk about what's being talked about. We look at it. We look at the economic calendar. We'll look at that here in a second. So that's the thing for me is the market posture has to hold water. So number one, can we go back historically and say, hey, we have been pretty much with the market, or we get with it very quickly if it changes. That's all I can ask for in my trading, right? Is slow down when things get a little bit choppy, speed up when we accelerated. We had a good amount of risk on during the bullish time of the market. Should have made some good profits during that. Right? We should be putting the right strategies on if you're options trading based on market conditions. That's what we should be getting from this. So I hope that you're at that point, but if not, that's what we're doing this week in our trading plan is we're working on section 2, and we're focused primarily. Everybody's routines are very similar here. So it's a matter of establishing what is your posture, what is your trading posture, what are your implications, what kinds of trades, how long do they last, have you adjusted your risk levels, how so, what strategies are you trading now based on conditions, what trade management strategies, are you tightening stops sooner, later, taking off more, are you taking off a third, a half, right, things like that. That's all of that is we have the ability to kind of do that from a higher level, from a general's perspective, right? Like we just sort of say this is how all trades are going to be managed based on this. And as markets change, we change these parameters, and then the individual trades naturally adjust. That's what I'm hoping for. So that's what we should be working on. I hope you feel good about that. Let's talk about the watch list, though. Let's go through it first, and then we'll spend any remaining time on, well, let's do two things first. Let's pop over here real quickly. Look at next week's economic calendar. Next week, minor Fed speak. Nothing on minor Fed speak, although Kashkari's disrupted things before. Minor Fed speak, jobless claims, consumer sentiment, and Fed speak. The Fed has actually shifted a little bit. If you look, obviously no probability in June and minimal probability in July at this point. 2-1 against. 10-1, 2-1. But in September, it's actually moved back into a favorable. 1.5-1 in favor of a cut in September. So the market's like, hey, maybe. So that's what we're looking at by way of the Fed. So the market's but if it starts to sniff that it's not going to be until late in the year, November, that will obviously lead to a more sustained, choppy summer. So, okay, let's get to the watch list. What do we have? Apple gapped up. It sold off, but it held on to a lot of it, 6% of it. We can't trade it until we see it stabilize and what comes next, but that's good, right? That's good. Apple being bullish like this is good news for the market. Obviously, it's a leader in tech, so we'll see what that does. But it might be, it lagged so long that other things are now under their 50s, and it might be too late. Everything else is going to have to work their way out of it, so we'll see what happens. AIG, good earnings, looks good. I'm just waiting for a pullback. That's one I'd be willing to trade. AMD, underwater, bad earnings. Now, chips is one where I think, okay, you know what? If these chip stocks sputter and they can't get back above these prior levels here and they roll over, yeah, we could see this thing for sure. So chips is one where I'm like, if I'm going to speculate bearish, I'm going to be looking for the weakness. That's what I'm going to be looking for. Amazon looks strong. It's making a new high. It's trying to lead consumer discretionary. Good earnings. If Amazon pulled back and could find support above the 50, I would consider it a minor cup and handle. AXP looks great on the table. Higher high, higher low. Boeing, we're just watching it. It's trying to surge. It's like we're making money, we promise. It's actually just lost less than expected. Bank of America, that looks ripe. Higher high, it pulls back. Look at the volume. Look at the volume during the sell-off. Nothing. Now we're just waiting for those buyers. Yeah, I think there's trades to be found in financials bullishly. Caterpillar's underwater, under the 50. Chipotle, it's bullish, but it's hard to trade. It's getting closer. Capital One looks bullish. Higher high, higher low, sitting on top of the 50. Oil down significantly, back below the 50. We love that. Let's just pause for a second, take a look at crude. Here is CL. Crude, back below the 50. We love it. It bounced, and it failed to make it back to the old high. This is a completed head and shoulders pattern. There's a shoulder, head, shoulder, neckline. Right across there. Broke it with volume. Love it. What else besides oil? The other thing that we need to look at that we looked at last time is the dollar. And we're actually getting some good signs there as well. So, it hasn't showed up yet. But if we get a strong week here, this looks interesting because we really failed to advance the trend. We established a little bit of a basing pattern, and then we broke it to the downside. We're still above the 50 here, but let me take you back. Let me take you back to a year so you can see what you can see right back in here. As we got into the September, this trend continued to advance. And it wasn't until we got over here when this happened, which is kind of similar. And you can see that by the time this broke back below the 50, middle of November, the rally was on. So this little weakness here, it's hard to say we've seen that happen yet. But if the dollar starts to ease up, that certainly eases the pressure on the stock. If the dollar advances, it improves the likelihood of a 10% correction. If the dollar regresses, then we may actually pull out of this. And like press your analyst friend or analyst that you watch said, we may see a rally. So we're open. We're watching. Okay, let's get back to the watch list. Where are you? Okay, where were we? Caterpillar, Costco. Costco looks like it is breaking out of a sideways trend. If it gets to a higher high and then pulls back, I'm open. Delta's bullish but needs a pullback. The Dow's sputtering, trying to pop its head back above the 50. GBT. Oh, GBT. If it can't get above the 50 and if it doesn't get back to anything here is real dangerous. Even if it gets to like this point where it's barely above the 50, I still say it looks like it's rolling over. GE Aerospace. I'm just waiting for my opportunity. Waiting to shoot my shot. Gold. Down a little bit, but still above the 50. Google looks strong, starting to try to maybe bounce out of this earnings. It's kind of choppy. There's opportunity. IWM, back above the 50. Meta, trying, but well underwater still. Microsoft, the same. That's where the stress is, right? Apple and Google look good. Meta and Microsoft, not so much. Micron is sputtering above its 50. Netflix, underwater. Nvidia, sputtering above the 50. So it's just like, is it going to hold on? Picard was a very strong. Industrials is down now. So the Q's just kind of sitting there. Hanging on, SPY, same thing. Semiconductor. So there's a few semiconductors. The leaders, Micron, Nvidia, Taiwan Semiconductor, the leaders are just sort of grinding along above the 50. The VIX is low, which is why I if you didn't see it, I put out a trade alert on intraday. If you're not seeing those are in the announcements. Let me bring this over here and scroll up. There it is. Intraday alert for a calendar spread. If you are comfortable with those, it also came via email. Make sure you take a look at that. There we go. Okay. Um, that's what messes us up. Why so optimistic without my? Why am I optimistic, press? Sorry, I didn't see when that came in. Uh, that's referring to the Fed's rate expectations. Got it. I mean, it's funny to look back historically, right? Like, think back in January when everyone's like, oh, they're going to. Remember when we talked about UBS? UBS was like, they're going to lower it 2.75 this year. We're like, what are you talking about? They thought we were going to get cut in March and another one and it was going to be down 1% by now. And now we're like, yeah, we'll be lucky if we get it in September. I agree with you, man. It's and if you remember last year, I'm like, as soon as they stop raising it, it's within like a week and a half of them being done raising it, everyone's going to be like, well, when are we going to get a cut? And they'll just build it in. And it's just like, that's how the market cycles. For sure, it's frustrating. Anyway, love it. Thank you for clarifying. Okay. Let's finish this with there's WM. It's setting up like it's for a bounce, but look how sideways it is. It's very hard to expect that to break out. So I don't know. Walmart's the same, right? A lot of those sideways. Materials is down and a little sideways. Communication services trying to come back, but a little bit in a triangular type pattern. We like to see energy dropping. We like to see financials and industrials both trying to stabilize above the 50. Technology doesn't look like it's trying to stabilize above the 50. It looks like it's barely putting its head above water. Staples, iffy. Utilities looks quite strong. We're concerned about that. Healthcare is just kind of sideways underwater. Consumer discretionary, maybe trying to get a boost from Amazon. Okay, we'll see. Okay, we looked at the trading plan already. Let's do a quick search. We haven't done one in a while. We have a couple of minutes. Let me know if you have any questions, comments, concerns about anything that we've talked about today. Do you feel like you know what you're trading? Let me get back to where I can actually see the comments and questions. Okay. Screener. And let's real quickly do the glue sniffers, Sandy. The glue sniffers that think the Fed is going to give us 2 points down. Okay. Average volume. I want over 2 million. I guess I haven't built this in a while. I feel like it's changed. There we go. Price. I want it to be over 10. And I usually put optionable and shortable. It's not super necessary, but we'll put it anyways. It takes like 20 stocks away. Then we'll go to the technical. And we're going to go above 50-day moving average and above the 200-day moving average. Oh. And nope. Okay, so 300 stocks. It's still a good bullish range out there. That's why I look at this as corrective, not worse. There's still 300 stocks in our bullish range. So if you come in here and you go to industrials, let's go back to descriptive. And you go to the sector and you go industrials. 15 stocks. Let's get the performance sorted so that the best is at the top. And let's go look at these charts. Okay. We have GE Aerospace. We have Delta. We don't have United, but I think Delta's fine. Electrical equipment and parts. VRT. Oh, that stock looks fantastic. Look at that trend. You can see we should have done this. This is where I kind of have to chide myself because I sometimes get complacent feeling like, yeah, we've got a great watch list. But this would have showed up for us on this watch list 2 months ago. And then we would have been able to catch a couple of these as it's moved from 50 to 90. All right, so VRT, I'm going to put that on my list. It may get bounced later due to volume, right? But it's a good start. Now, this stock's only at $2 billion, so I'm not going to put it on because I just don't think it's going to hold water for options. But if you're trading only stock, that's not bad. It's a $14 stock. It's been going up. RTX, defense. I like that. I'm going to put RTX on the list. Let's go to page 2. And what do we have here? CNM, industrial distribution. That's got some strength to it. Eaton Corporation has some, it's kind of chopping around the top. We might have missed that. Copart. We've actually used to have CPRT. I'm going to put CNM. Okay, so we got 3 new industrials. Good. Now, if you do the same with financials, I'm not because I want to show you one more thing, but if you do the same with financials, make sure that you don't. Now, this one has 107. So the first thing you could do is just go stocks only, meaning no ETFs. And you can see there's only 45. So of the 107, 62 of them were ETFs that we didn't want to see that aren't necessarily financials. You still have 45. So I looked at all the sector, all the industrial, because there was only 15. But with 45, what I'm going to do here, I'm going to go one at a time. And I'll say, all right, let's go to asset management. And of these, who's the best? Right? Where I say, ooh, this Corebridge Financial's pretty strong. Like, look at that trend. Okay, so I might put that on my list. It's a $17 billion company, so that's okay. Boom, let's put it on. CRBG on the list. And then we would go to the next one. We'd go to banks, diversified. And we'd say, okay, who do we like the best here? And we'd say, oh, Wells Fargo's looking real strong. We already have Citi. We already have Bank of America. Do we like HSBC or BCS, Barclays, or Hong Kong? I can't remember what their HSBC is. Hong Kong Banking Corporation. I like WFC. I'm going to put it on. That's it. And then I could just keep going through this. And I could go through it one at a time. And then I could go to regional banks and so on and so forth. Now, okay. So let's go back to all. And last thing we're going to do today, I'm going to play with this here. And I'm going to say, you know what? I actually want it below the 50. Below the 50, but above the 200. And what that's going to do is that's going to find stocks that are starting to turn over. Where I'm like, hey, what's showing me? They haven't broken the 200 yet. Like it's just starting to show negative momentum. So this is more of a early bearish opportunity. So as I said, we might go with something like this. We might say, you know what? I'm going to go into technology because that's where, if this market does sell off, that's who tends to get hit the hardest. And I'm looking for things like this, right? Where I see dropping down, pulling back up, and looking like it might roll over again. So if you are looking and considering bearish speculation, this might help you to identify a couple of downward momentum candidates to consider. Now, here's what I would say. If you're on the fence, don't trade it. Paper trade it. Paper trade to the downside. Or at least if you're like, hey, it might drop. So let me paper trade how I think it might drop so I can get some practice with it. That's what I would recommend. Yeah, loved RTX. Yep. Thanks, press. Okay. Questions. Feeling good? Here's what I would say. If you think about this week's alerts, what would I expect? I would expect a bullish alert in a financial. Bullish alert in financial. I would expect another calendar spread as long as we don't pop above 14 or 15 on the VIX. With possibly an adjustment, we'll see. And will there be speculative to the downside? If we rally up on light volume and start to roll over towards the end of the week, I would say yes. So that you can see it's a little all over the place. Could be up, could be sideways, could be down. Be water, my friends. What's the risk level? Certainly lower than you have been, I would expect. Okay, I'll see you guys tomorrow morning. Market open. And we'll talk about anything that's on. We do have if you did the trade, it's on. If you didn't do it, it's still viable, I would say. So take a look at that calendar spread. It's good to see everybody. Enjoy the rest of your Sunday. And I will see you guys tomorrow morning. As always, happy trading.